Welcome to the recorded workshop session for the Accounting Distance module.
All right, so now we are getting to the salary section. All right, so we have an exercise here, which is just going to be easy. All right, because this is...
Sorry, but there's no sound coming through.
All right, so we are now working out their salaries. All right, today a lot of you have been paid, so you've looked at your salary slip. All right, so let's just say you've been given this information and you need to work out your net salary, all right, and cost to company. All right, so the word net means something has already been deducted. All right, so the word net means that something has already been deducted. All right, and the word gross. All right, so we've got the word net, which basically means something has already been deducted. All right, and then we got gross. Gross basically means before deductions. All right, so let's work out. So it means when we are working out the net salary, we are working out your salary after your deductions have been taken out. All right, so here is your salary. All right, and this is your gross salary. All right, because it comes before deductions. All right, what are your deductions? So remember, we do contribute to pension funds. So if you're contributing to a pension fund, so this will be your deduction. Okay, pay as you earn. So PAYE, it's pay as you earn. So this is a deduction that goes to the taxman. So that's the tax on your salary. All right, and we have UIF. So UIF, we know that it stands for Unemployment Insurance Fund. Okay, so UIF helps you in the event that you went on a maternity leave. All right, if you have been contributing to the Unemployment Insurance Fund, so that's what will be paying your salary during maternity leave. All right, or if you get retrenched from work, all right, while you are in the process of looking for another work, you can actually claim your UIF. All right, so the UIF is actually 1% of your salary. So it's 1% of your salary, and your employer also contributes 1%. So for UIF, you as an employee will contribute 1% of your salary, and then the employer will contribute another 1% on your behalf. Okay, so another 1% will come from your employer. Okay, but only 1% UIF will be deducted from you. All right, it's going to help you during tough times. All right, so another deduction that you're going to have is medical aid. Okay, so paying 800 was the medical aid. So, and then you are paying 50 rands, you're contributing 50 rands to the trade union. So this is your gross salary, but then the following are deducted from your salary: your pension fund, your pay as you earn, your UIF, unemployment insurance fund, your medical aid, and the trade union contribution. All right, so let's calculate your net salary. So your net salary is 10,000, we know. So let's wake it out. So this one is going to be pretty quick. So here we go. So here is, we calculating, remember, your net salary. And then we said that your net salary equals to gross salary minus deductions. All right, so we are going to have your salary. So your salary is given, it's 10,000. So that's your gross salary. So remember, the word gross means before deductions. Okay, so if we calculate your net salary, we are calculating a salary after deductions. So let's work out your deductions. Okay, so you say gross salary 10,000 less deductions. Okay, so your deduction number one, we see it's your pension fund. They say it must be 7.5% of your salary. Okay, so we're going to go and say, okay, so pension fund, deduction number one. So you're going to say it's 10,000 times 7.5%. So we take a lovely calculator, right, and we say 10,000 times 7.5%, 7.5%. All right, so let's do it again. It does not look right. So let's say 10,000 times 7.5%. Okay, so we put actually 1,000. So it might, let's do it correctly. 10,000 times 7.5%, 750. Okay, so your pension fund deduction will therefore be 750. So because we are deducting, we're going to say minus. All right. So always in accounting, it's very important to show your calculations. When you are marked, you're given a mark for the calculation you have done. Okay, so let's go to another deduction. It's pay as you earn. So look at what they're saying. They say pay as you earn is 20% of your salary, net of pension. So it means when you calculate the pay as you earn, you must take salary and deduct pension before you calculate this. All right, because remember the word net, it means you have deducted something. So what it means is you're going to say the salary, because they say it must be the salary net of pension. It's as good as saying salary minus pension. All right, you get the answer and you multiply by 28%. All right, so this is how you're going to do it. So you're going to say your gross salary. All right, so let's just, so it's your pay as you earn. So you're going to say PAYE. So they say here, you say 10,000 minus pension and then you multiply the answer by 28%. Okay, so let's work it out using our lovely calculator. Okay, so what we're going to do is we're going to say 10,000 minus 750. And we get the answer. All right, so this is the salary net of pension. And we take the answer and we multiply it by 28%. 28%. So here we go. So the amount that will go to the taxman is 2,590. Okay, so it's a deduction. So it means our salary gross 750 is going, 2,590 is going to the taxman. Let's look at the next deduction. So UIF, you see, for UIF, they don't give you a percentage. They expect you to know what the percentage is. All right, so they do expect you to know what the percentage is. So I told you that the percentage is 1% of your salary. All right, so how much is 1% of your salary? So you're going to say 10,000. So you're going to say UIF. So it will be 1% of your salary. We're going to say 10,000. Okay, times 1%. Okay, so work it out with our calculator. And so we say 10,000 times 1%. It's 100 rands. So UIF 100. And then we go to the next deduction. Medical aid contributions. So here they have given you the amount. All right? So remember, so they give you that information that the employer is contributing 800 as well. So what is important is to know that when you are calculating net salary, you ignore employer's contribution. All right, let me repeat. When you are calculating your net salary, you must ignore employer's contribution. You only deduct your contributions, your own contributions. Okay, so let's go and see how much is actually leaving your pocket by now. All right, so I see you don't particularly like this. You don't like deductions. I know many of us don't like these deductions. All right. Okay, so let's put the medical aid. It's 800, so you say minus 800. Okay, so trade union, all right, just 50 rands, tiny amount. Okay, so trade union. Okay, so then what we're saying is that the net salary is your gross minus your deductions. So we must just do the calculation now and say 10,000 minus 750 minus 2,590 minus 100 rand minus 800 rand minus 50. There we go. This is your net salary. So you're going to say net salary how much is it? It's 5,710. Okay, so that answers our question here. Calculate the net salary of Adam Kosa. So Adam Kosa will get a net salary of 5,710. All right, so we move on to the next question. So the next question is saying calculate the cost to company. All right, so cost to company. So let's go to cost to company. All right, so your cost to company will be equal to your gross salary plus employer contributions. All right, so that's your cost to company. All right, so basically here we are looking at you take the gross salary, so it's here. We can already put it. We can say the gross salary is 10,000, and then we add employer's contribution. So we must see what employer has contributed. All right, you see, with a medical aid, they told you that the employer contributes on a rent for rent basis. So it means if you contribute 800, the employer is contributing 800. Okay, so then what we're going to do is we add what the employer is contributing for you for medical aid. All right, so this is for medical aid. And then what else is the employer expected to contribute? Remember, I said with respect to the UIF, you pay 1% of your gross salary, and the employer also contributes 1%. So this is the employer's contribution. So we must add it. All right, so we're going to look at, you say this was your UIF. So you contributed 100 rand, so the employer will also contribute the same amount. Okay, so the same amount. All right, so these are the employer's contributions. So there is no employer's contribution to the pension, as you can see. All right, but if they tell you that the employer is contributing towards the pension, you must also add it as well. All right, so you have been told that the employer is contributing towards the medical aid. All right, and then UIF, the employer is required by law to contribute. So that has to be there. Okay, so then your cost to company will be 10,900. All right, so that is your cost to company. It is your gross salary plus employer's contributions. All right, so I hope that has made sense to you. So we know what the net salary is. It's a gross salary minus deductions, but your cost to company, it's a gross salary plus employer's contributions on your behalf. All right, so I'm sure you'll be able to do that.